Every little help counts, especially in these times that we find ourselves in where things are getting expensive by the day. And so today I'm going to share with you one benefit that is due you as a resident in the UK, given to you by the government. So stay right here with me as we look into that shortly. Hello, friends, and welcome back to Every Mom's Hub. My name is Jabaki, and if this is the first time you're joining us, we say a big welcome to you. And if you are a returning subscriber, we so much appreciate you. So just as I said today, we are going to look at one benefit that the government gives to every UK resident, irrespective of your immigration status in the country. Everyone can access it as long as you are resident in this country. Lifetime Individual Savings Account, or Lifetime ISA for short, is a flexible, affordable means of saving and investing money to help buy your first home and also to complement your pension for later life. You can save up to £4,000 per each tax year. And usually the tax year runs from 6th of April to the next year, 5th April. And so as long as you are not exceeding your overall annual ISA limit, you'll be able to save that maximum amount of £4,000 into your lifetime ISA. What this means is that there are other kinds of ISAs that you may have opened, and so all of them put together, such as the cash ISA, the shares, innovative finance ISAs, and all that, when you put everything together, the money should not exceed £20,000. But then today we are just going to concentrate on the lifetime ISAs, which has a maximum or a cap of £4,000. That's the maximum that you can put into the lifetime ISA. The government gives 25% bonus on any amount that you contribute into your lifetime ISA. And this does not include any interest that you may get or investment growth that you may get on the contributions that you've put into your savings. The 25% bonus is an extra that is added to the amount that you contribute into the savings that you put in your lifetime ISA. So if you put in the maximum amount of £4,000 per the tax year, then that means that you are going to receive £1,000 bonus from the government. So just like the other ISAs that we have, the bonus that you get on your lifetime ISA is tax-free. It's not going to be taxed. Over here in the UK, usually there is tax on such things, but then with the ISAs, you don't pay any tax on it. So the £1,000 or the bonus that you would get, depending on how much you're going to contribute into your lifetime ISA, is not going to be taxed. So if you pay in the maximum amount, £4,000, you're going to have a tax-free bonus of £1,000. To qualify for this lifetime ISA, you should first of all be a resident in the UK. So it doesn't matter what your immigration status is, as long as you live in the UK or you are a crown servant in a diplomatic service, or you are in the armed forces serving abroad, your spouse or you yourself can open the lifetime ISA. You must be 18 years or over, but under 40 years old. But then you have to make the first payment before you are 40 years old. When you turn 50, you will not be able to make any payment into the lifetime ISA, and you will also not get any bonus when you turn 50 years. But then your account will still be opened and you will keep getting the interest or investment growth on your account. Some rules apply when you want to take out the money before a certain age, so we will look into that. You can withdraw your lifetime ISA to buy your first property in the UK, and this should be your first property. You should not have any other property in any part of the world, and you should make sure that the property that you are buying is £450,000 or less. And again, you can buy the property at least 12 months after you have made your first payment into the lifetime ISA. You must also use a mortgage when buying the property, and you must let a solicitor act on your behalf when purchasing the property. So these are the rules that apply to you buying your first property with the lifetime ISA. You can withdraw your lifetime ISA when you are aged 60 years or above, and also when you have a terminal illness and you have less than 12 months to live. One thing, however, that you must note is that if you decide to withdraw money from your lifetime ISA for any other reason, apart from what I have just mentioned, then you would be paying a charge of 25%. Then this is just to take care of what the government has given to you. But you realize that, in fact, you would be getting less of your money that you put into the account. And this is because this lifetime ISA is meant to be for a long-term product, right? So they don't want it to be like a normal savings account where you can just go and withdraw money just like that. It's a long-term something. So before you go into it, think carefully about that. If you are not going to purchase your first home, are you willing to let the money rest for when you go on pension, that is 60 years and over? Or, well, you wouldn't pray to, die soon or whatsoever. But you should think carefully about this before you sort of lock your money into the lifetime ISA. Yes, the bonus is very good, but then you will only be able to use it for what I listed for without paying any charges. So just think about it and make the right decision for yourself. So we are going to look at some quick maths here as to how the deductions work or the charges work should you go in for the savings for any other reasons apart from what I've mentioned. Let's do a quick math over here. If you have an initial savings of, let's say, £800, you will earn 25% government bonus, which would be £200. And so you will get a total of £1,000 in your account. If you wish to withdraw the entire amount, which is the £1,000, for any other reason apart from what I listed above, then there would be a 25% charge, which would be applied to the full £1,000. So you'll be paying the charge of £250, and this will leave you with £750. You would realize that although you put in £800, if you go for the money for any other reason, you'll be receiving, you'll be paying the charge and you receive just £750, which is less than the £800 that you put into it. That is why I said you should think carefully about opening the lifetime ISA before you go into it so that you don't lose out on it. One other thing about this lifetime ISA, which is very good, is that if you are buying a property with someone else who also has a lifetime ISA, the person would also be able to use their, bonus in the purchase as long as they don't have any property. But then if they already own a property, then they would pay the charge of 25% to the government if they already own a property. But then if they don't own a property, then you can both use your bonus to buy that property, your first property. To claim this bonus or to open a lifetime ISA account, you should contact the building societies or banks that are into it. It's not all the banks that have a lifetime ISA account, with them. So you should find out which building societies, which banks, offer that kind of service, and then you open the account with them. So when you open it every month, depending on what you put into the account, you will get the bonus on that 25% bonus on that. So every month, the manager, they call them the lifetime ISA manager, that is the bank or the building society that you'll be using, they would just calculate the amount, the 25% on the amount that you put into the account, and just add it into your account. You don't have to do anything. They'll put it in it for you every month, and you just receive notification that you have that. So you can choose the building society or bank that you want, and it also has its own interest rate, so you can check that carefully online. Also, you must bear in mind that just like any other investment, if you decide to go in for the investment aspect of the lifetime ISA, there will be risk attached to it, so you should bear that in mind. You can either lose on that or you would gain. It's a risk, and it's in every investment. So bear that in mind when you decide that, okay, you would go in for the investment aspect of the lifetime ISA. Or else, if you don't want to, lose out or anything, then you just stick to the cash where your money would be in the account, just like any other savings, and you just receive some little interest here and there, which is not much, but then at least you are sure of the fact that your money is not going to diminish or whatsoever. So you can decide on just going in for the cash one. I hope this information has been helpful, and I would encourage you to think carefully about this lifetime ISA, so that if you feel is the best thing for you, you can get into it. You can read online also from the government website if you want any further clarifications, or you can speak to the banks or the building societies that are into the lifetime ISAs. So this is one thing that you can benefit from the UK government. And so please think about it, and you can, take advantage of it. Thanks so very much for watching, and don't forget to subscribe to this channel. Till we meet again, take care of yourself, keep safe, and it's bye for now.